Every entrepreneur has a story. Welcome to Happy Half Hour with an Entrepreneur, where each episode your host, Brian Carney, will share a drink with a successful business owner and have them discuss their unique journey, gaining insight on what it takes to be an entrepreneur and the different ways to get there. Brian isn't just a beer nerd, he's also the co-founder of River's Edge Advisors, a financial planning firm headquartered in Delaware, specializing in working with business owners. It's time to pour yourself a drink and enjoy a happy half hour with an entrepreneur.
Hey everyone, welcome to Happy Half Hour with an Entrepreneur. I am your host, Brian Carney. My guest today is James Giancotti. James is an investment banker turned entrepreneur, having founded a company called Oddup. Oddup was created because he found information in the investment banking world to be extremely confusing, unreliable, and really biased. So he created a better way to do all of that. James, welcome to the show.
It's an absolute pleasure to be here.
Now, I'm really excited about this, first of all, because you are live from Australia, which is, you are on your third day of your mandatory quarantine before you're allowed out. Well,
yes.
So you have literally nothing else to do but sit here and talk to me. So that's good.
I'm glad that we're talking today. Well, the world is sort of going on outside. I'm here with you. That's fantastic.
I love it. So like you said before we started, you're going to be the DD for this episode because it's very early in the morning and socially unacceptable for you to be having a beer. But yes. I appreciate that.
So the pubs in Australia aren't open until midday. So that's usually when we start. But we could go, from 12 p.m. until 2 a.m. So
okay, there you go.
We pace ourselves over a time. So yes,
I love it. That's great.
I'm preparing for that. Yeah.
So I'm going to be trying a beer today from the New Belgium Brewery. So New Belgium has a special place in my heart because during quarantine, me, my wife, and my 3 kids moved to Fort Collins, Colorado for a month just because we were all virtual for everything. And New Belgium's brewery was literally 2 blocks from where we stayed. So that was pretty awesome. So I'm going to be trying a winter hazy IPA called Accumulation. So I'll give it a rating at the end.
Thumbs up. Enjoy.
Thank you. So let's jump right into your business.
Sure.
Tell me a little bit about Oddup and what exactly it is.
Sure. Well, I always like to say what we made it for versus what it actually is made for.
Okay.
So we made Oddup, so the short answer is what Oddup is. Oddup is a ratings data company that rates startups in crypto. Similar to what a Moody's would do, what an S&P would do as they rate stocks and bonds and so forth. We do that for startups in crypto. And that's usually what I would say to my mother or to my mother's friend who doesn't know what we do.
Right.
And they get that pretty easily. Sometimes I can even dumb that down, but that's pretty much what we do. But when we go in a full details of what that becomes is, we look at every bit of analysis on, what makes a startup, its rating, what's its valuation, how does it, how can we pull out data from a company on that date rather than a date they raised money? And we do this for crypto, which is relatively easier because of the amount of information we've got on hand.
Yeah. So now this is pretty interesting. So did you start out with this just to do startups and then you added crypto in, or did you kind of do them both at the same time?
No, we started Oddup primarily because there was a need, and we were based in Hong Kong when we first started, and there was no Crunchbase, no Pitchfork at that time to get information on Asian-based startups, and so it was very much looking at, and this was in the mid 2010, so 2014, 15, we wanted to create, or we actually did this by accident, to be honest. We actually started building the product because there was nothing out there, and we wanted to send to our LPs, limited partners, why we made a decision on that on a company.
Yeah.
And fast track that's when people started going, great, well, how about China, how about India? And then we expanded, and then we went into crypto as well.
That's amazing. So I'm really interested in your background because so you're Australian. Yep. And you go to law school.
Yes.
So why did you go
that a lot?
Why did you go to law school, and why are you not a lawyer?
Well,
I guess I should say a practicing lawyer.
Well, I don't know. I said that's a great question. So I got into law school. There was a fair bit of pressure from myself and for other factors, and I decided to get into law school. Got into law school, and I actually didn't start at law school because I didn't have enough marks, and so I started an arts degree, but did mostly law subjects. And then because a lot of, and this happens, I don't know how much it happens in the States, but in Australia, a lot of people who get into these degrees can't handle university, and then the first year they drop out, so you can just sort of jump in that spot. And so I started a law degree in the second year and converted all my subjects and became a lawyer, primarily around intellectual property, because I really like the idea of Napster and getting individual rights, and that was really quite exciting for me. And I accelerated my law course so much, though I was bored of it towards the end, that I did a 5-year course in 3 because I was doing night schools because I just wanted to start working.
Yeah.
And by accident, because I didn't become a lawyer, because my first job was in the tech industry pre-2000, and it was so exciting. I was flying the world, flying interstate, and all of a sudden, I thought, oh, this is much cooler than being a lawyer. I'm making more money than being a lawyer. And then it sort of stayed in tech and went into consulting from there.
That's pretty amazing. So,
Yeah.
now, then you went down the investment banking track,
Yeah.
right? So how soon after law school did you go down that road?
Oh, so I was consulting initially, so in tech consulting, and by being at Deloitte at the time, I was doing more investment bank clientele work.
Got it.
And so they would put me in transformation projects and so forth. And from there, I was like, these guys seem to be making good money down here. This looks interesting. And I started doing clients with some big banks, and lo and behold, there was the love of I always say I came into banking for the love of the majors.
Yeah.
And the majors being money. And so I started my journey in banking in JP Morgan in FX, and then moved on to Goldman Sachs at a later time. It was quite much nicer at the time.
Yeah, that's interesting. And you didn't do it the way that Americans do it is they get into investment banking. Everyone moves to New York City. You moved to Hong Kong.
Yeah.
So
I saw, so actually it was a funny experience. I wanted to leave Australia like all good, actors.
Yeah.
Like all the actors that play Americans in America or Australians. I did exactly, we call it the Kylie Minogue disease, which Kylie Minogue is a famous singer. If you do know about it, the audience knows about it. She left in the 80s and, has been in the UK making records and so forth.
Yeah.
And comes to Australia back like I do for Christmas, and but still works overseas like all the actors in the world. And so we call it everyone just leaves. And so I went around the world before I chose Hong Kong. I went around the world. I went to London. I went to New York, and I have worked in those places. But the key thing for me was, where was where the biggest growth was.
Yeah.
And Asia, this century certainly is, and that was where I decided to go, and that was being a wonderful experience to do that.
That's pretty amazing.
Yeah.
So
it was only supposed to be 2 years. 12
and how
years
long?
later.
How long?
Yeah. I was in Hong Kong for 12 years.
Oh wow, that's pretty incredible. So this idea comes to you while you're while you're working on investment banking clients for Oddup?
So when I was a researcher from going from the front office in FX and trades, I went into the research department at Goldman and primarily working on big tech listings. I was in the internet team where we're looking at companies like Facebook, Baidu, Alibaba, all these big name companies, and then how we put a rating around this. So I understood the methodology from my time at Goldman. After that, of course, it's sort of, once someone told me when you work at Goldman's sort of at the top of an investment bank. And once you work at Goldman, you don't really feel like working for another investment bank. You feel like you've done what you need to do and do something else. Yeah. And every person that left Goldman is doing entrepreneurship. And that was where it was all part of my DNA. My father's an entrepreneur. He's a good Italian boy, all that sort of stuff. And that's how I sort of got the excitement of, getting right into it and starting something. So when I was at Goldman, I was, it was a twinkle in my eye. Here I am now.
That's pretty incredible. So looking at Oddup, it seems like it's part analytics, part tech, and part ratings company, right? So how does all of that sort of combine together?
So when we look, so maybe I'll talk about the journey, sort of come out to how it got to there.
That'd be
So
great.
when we originally first started Oddup, we were actually like, I used to do at Goldman, where we were a ratings team. We had analysts there. We were actually putting manual data together by actually feeding that information in and then coming up with a rating with the methodology around that, as in what should the value of the company be? Should it be buy, hold, sell, and driving that together. And so that was the ratings part of it. Over time, the tech analysis said that, you know what, people become problems, but technology doesn't if you can do it right. So all the methodologies that we were building, you know, in the sort of in the Excel spreadsheets, then turned to an API, then turned into, a whole heap of artificial intelligence and putting scripts together. And then that sort of graduated. And so the analyst team became much smaller because the technology could do the same thing, the ratings.
Yeah.
Then as the company kept on moving, and we still do ratings, of course, but the technology was that we built the product because we thought we were being the analysts for the clients. What ended up happening was that we ended up becoming, the technology and the data became more important for the clients, because the clients became very much going, okay, we love this data, we love the ratings, but we'll make the decision. We've got our own analysts. And so that's when the data part of it, providing more information to them, and they put it within their own system. So Oddup became, from its own system, it actually became a data company with ratings, providing the data to major clients like Bloomberg and Thomson Reuters, because they had their own system. And the biggest lesson for us to learn there was that when you create a company and a product, you go, oh, you know what? They're going to use my product. They're going to log in every day like Facebook. And that's not true. They've got their own product. They've got their own methodologies. What they want is the information you can give them, and they will pull it all together. So it's that's how the product has merged. And then, of course, crypto is a treasure trove of price data that you can get at any time, a bit like the stock market. So that's where it's become interesting for us.
Yeah, well, obviously, I mean, the whole crypto world is fascinating to me, and I think many people don't understand it, but it is an exciting thing. We talk to crypto millionaires pretty regularly, which is a fascinating thing. It almost seems insane and too good to be true. So, from a end user, you mentioned Bloomberg and Thomson. Who else is going to be a good client for you guys? Like, if I'm going to invest in crypto, is that something that I subscribe to, or is it more for a B2B type of thing?
So our primary focus is B2B,
Okay.
and what sort of types of transactions we do. Plus, there is a level of, when you start providing rating services, you need to have that client understanding with the other companies, because there's some certain clients we don't provide ratings to. They just want the data, and some who do want the data, who do want the ratings. But primarily for the sort of the B2C user, which we do have a product and it's relatively cheap. It's actually free for a couple of components for it, is, they will be looking at that data and sort of analyzing, our predictions and our trends and, what we do. But we, particularly for the B2C user, we don't give those ratings, because there's that level of, YouTube analyst that goes, it's going to be $200 today and then goes to 150, and there's a level of hate around that. We don't do that. We just say, this is where we see the trend going. You make your own decisions what you do. For the clients, when we built the product, we were after angels. Now it's corporates, and it's a lot of tech companies, believe it or not, buy a product, and we never expected that. And that's because, and as you learn in Silicon Valley, after being here so long, you learn that actually a lot of the VC money goes into giving money to the other VC money companies. You need this product, you need Notion, you need Zoom, you need all these other things. And we're just another product, and they're trying to use our data to sell to other tech companies who've just raised capital. So, a little secret in Silicon Valley people don't understand is a lot of the money that they actually receive goes back into this sort of funnel, and it goes round and round and round, and they're just buying more software. So, and they sell a little bit of product, but that's the little trick in the VC world. And so that's how we do it. So if you were to drive down the 101 or the 280 in particular the 101 in San Francisco, all you see is tech companies and products that people can subscribe to. They are people who buy our products because they're looking on our system on companies that have either raised money or are doing really quite well, and they're rating as well, and they will be around in 12, 24 months, 36 months. And so by giving, that's typically who sell to. From the crypto side, wow, if you asked me 2 years ago, would crypto be such a huge market share for us, I would be shocked.
Yeah.
But here is the world, and that's why you've got lots of millionaires, because the easiest trade in the world was just to buy some Ethereum, 18 months ago, and just at $100, $150, and just sit. You didn't have to do anything, and you're a millionaire type of thing. Or Solano. We actually, one of the calls we made, it was Solano at because they were actually part of the 500 startups batch, and we knew it from. We just told people, we like this, and it was about $1. And we said, you know what, put $1,000 in. Worst thing is you could lose $1,000.
Yeah.
$250 later, they know that was just an amazing trade. And so there's a lot of millionaires that have come in crypto. And so, of course, those people are buying our data, because when we come up with those little nuggets that we like, that nugget pays for the subscription for the next 40 years type of thing.
Right.
So it makes more sense to do it.
Yeah. No, I think it's a really interesting business model. And I think you guys have really honed in on something. And from a revenue generating perspective, the idea of having recurring revenue is sort of, that's like the golden goose to be able to do that. And any subscription service is that. Now, did you guys intend to start out that way, to have, sort of this recurring revenue stream if you have clients that continue to subscribe?
So when we originally started, we just thought it was the angels who would spend, $100 a month and, be done with that. And then, revenue, continuous revenue is good because it helps know how to pay the bills, how much you need to raise if you need to raise. The data part was different, because the more content there's, more people pay us money. And so that has become a very interesting thing for us, and how that grows, and how, and so, I always learned before we started Oddup that SaaS was the key.
Yeah.
Then I realized that data is the new gold, new oil. And so it's pretty much both when you put them together, both software and data. Given what everything is going to a subscription model, we feel like we should keep on going.
Yeah.
But yeah, look, I wouldn't say it's a golden goose, but it's something that people, people subscribe to a lot of things. And so our data product is another thing they can subscribe to.
Yeah, for sure. Now, what is your particular specialty or thing you like to do in the business the most? What's the thing that you love to focus on? Your unique talent, as they say.
It's probably the thing that my team hates the most.
Okay.
And I like going, okay, why don't we do this? And why don't we do this? And so they're like, yeah. And then they're like, crap, but we have to do it.
Right.
So, if I was to sort of, pigeon myself in another role at Oddup, it would be probably the chief strategy officer. I'm very much strategically looking next year, year after, and then saying, how can we do it? So like when we started Oddup, we were one of very few, if any, ratings companies for startups. Now, they're blown out. Now we've gone into crypto. We're now getting those questions from those people who followed us going, what are these guys up to? And as we launch new products, I'm always looking at the trends of the market and how we can manage it and be first, sometimes fail doing it, or sometimes sort of try and get there, but how we can do it better. So that's me and my team, of course, hating me, going, let's build something new.
I have another idea.
Do that anymore.
Yeah, exactly. Where did you guys get the name Oddup from?
Oh yeah, this is fun. So when I was at JP and I basically stopped working, it was 2008. I started sort of investing in companies at that time. And there was a pretty hard time in 2008, 2009.
Yeah.
And there was a couple of websites that were selling logos and domain names for like $150. So guess what I did? I bought lots of them. And Oddup was one of them. In like 2009, we bought it. And originally our idea of Oddup was a gambling website. You can gamble on startups, the risk of startups.
That's interesting.
Yeah. And so, but of course, Oddup became a rating agency, but the name still applies. Are the odds up by following our advice to invest in this company?
Yeah.
And it's quite funny now seeing everything else like a ClickUp and every other company coming up with an up there. So, we know we were first. And then that's where the traffic light symbol came, buy, hold, sell, red, gray, yellow, and green. That's as simple as that, with a blue background. So we got all the 4 colors. So it was very simple branding. It worked. People got it. It was 5letters.com, and it has been successful since. And, we're pretty happy with that. But that's ultimately how it came up.
So you just said one of my favorite things is the art of simplicity is lost in the business world these days. I feel like a lot of people want to make things overly complicated, in part to make themselves seem smarter or whatever the reason is. I love the fact that you stuck to just being simple and straightforward, and it's clearly paid off.
Because people can say the name as well.
Right.
And people can type it out, so, when I have to give my email address and people go, Oddup, ODDUP. And it's a very easy thing it's 2 words. And so it's very easy for people to get. But I mean, it's effectively it. Every investment is a gamble.
Yeah.
And it's either up in your favor or down. We could be odd down, odd up, but on odd up is you always want to go up. So that's how it comes out. Look, simplicity is key. I think it's a lost thing now when everyone tries to be, you're right when you say people want to feel like they're smarter and so forth. But, there's a fair bit of confusion in this world. And I think in the last 2 years I've seen that there's a lot of information, misinformation.
Yeah.
Sometimes being simple and going back to what works really well for yourself, for your clients, and ultimately, as a brand. So we're going to stick to that as well.
Yeah, I think that's great. There's a great Tony Robbins quote that says, "Complexity is the enemy of execution," and I tell people that all the time. I used to work for a firm where they would do a financial plan. It would be like 112 pages long, and I go, "No one cares about that. That's too long." So you really need to be able to get your messaging short and simple and make people's lives easier. I think is a key.
Yeah, and that's exactly how we put the product together. So when I was building the investment reports at Goldman, they were 50, 60 pages long. People spent a month working on them, plus there was reviews and so forth. And then after speaking to a lot of clients then at Goldman, they were like, actually, no, we just want to know what the details. Do you want to buy, hold, sell?
Yeah.
We actually don't want to read your crap. We just want to know what the price would be then. And that was it.
Yeah.
And once I found that was a common theme, the question then came back to Goldman. This is where the ideas came around. Was like, why are we spending all this time putting this information together? Why can't we just be really fast, give people what they want, even in an app they can get on their phone? They're going to trade and so forth. And in crypto, it's so obvious that. Yes. And so what we thought about in 2014 when we started this has become true now in 2021, where people go, tell me what the price of Bitcoin is going to be. Yeah. They don't care about why you put it, why the price is here, why the price is there. They just want to know, if I give you $10, or I buy $10 of Bitcoin, will that become $20, and how soon that will do it?
Yeah.
And that works on stocks, that works on startups. And you see where simplicity works in a very easy way, because people are becoming more and more lazy, and they want to do more and more things, and they don't have time to tell you, how great my English is or how great my grammar is in a report that's 40 pages long. So that's how Oddup has become very fast and data and just give people content.
Yeah, I think
they want to do it, it's their own job.
Yeah, I think the idea of a traffic light, of a red, yellow, and green light, is the ultimate cut to the chase. Just give me the answer. That's all I care about. Now, I'm interested in. Obviously, you're making predictions, right?
Yes.
And when you're in the prediction business, things sometimes go well, like the idea you talked about before. But I feel like you can get some sort of public scrutiny if you make a call and it's not the right one. Have you guys seen any of that happen? And what's sort of it seems like if you make a wrong call, Twitter will roast you to death for you. But does that actually happen?
No.
That's good.
So what you see is, so we typically give people a price time.
Yeah.
And I think it's more relevant in crypto, because I think, and for us, because our B2B, we're talking with B2B, they've always got a longer stretch of time. So we were, like with Solana, we said, what, at the time, we think this could be a $50 coin. It may hit the top 30, and we actually could see some growth there. And so in our view, if you hold time, you'll make 30 times your money. This is a really good. Of course, it became 250 times, but the difference is that we under promised, over delivered. But people had that idea this was going to take a year, 2 years, 3 years. So when they purchased this product or purchased a coin, they go, okay, well, I know I'm putting $100,000 down on this asset, and it's going to be worth so much money. From a user perspective, from a B2C, we tend not to deal with that, because a lot of them can't manage long term. They want to make money instantly. And with the startups, and this is where the startup game is. The startup game can take 10 years to deliver on an asset.
Yeah.
That $1,000 in an angel list syndicate could be, $400,000 in 10 years time, but you've got to wait that that 10 years and actually sort of nurture it. And so this is where when we provide data and provide ratings, we tend not to get that because we're saying, hey, there is a time factor.
It's a great point.
That's why we tend not to want to do with B2C, not because we don't love them, but because technically they're not investors and they're just looking at, they're more speculators, and speculators don't work in any market.
That's a great point. That is a great point. The speculators are always, it seems to me like gambling on a football game. That's what they're trying to do. You bring up angel investing, and I'm interested in your experience and your background in angel investing. So
sure.
How's that process? How's that process been, and you helping people, or you having to do it, and you investing in it yourself? Talk a little bit about your experience in that world.
Well, so helping people angel invest, it's actually been one of the hardest things we did learn a lesson at Oddup, and that is that because with those type of people, they're usually making 5 to 10 to 15 a year of investments, and if they're making anything post, say 25K, becomes real money. And so the angel, it starts becoming in the millions per year on an investment. And so when we give that sort of information to those angels, we're actually, when we originally started to do it at the start, there was always that level of, oh, actually, we could be at risk because you're deploying capital and you're not going to see it for a while. And so hence why we've decided to move away from the angels, because, it's a much more emotional journey for them. Whereas for a larger scale company, 25 grand on a company is sort of like what they make, what they spend on a corporate dinner.
Sure.
It's nothing. Who cares about it? From my own personal experience, now I've got 50 companies under my belt. It's funny now, I tend to look at companies in the series A, B, C.
Uh-huh.
And that's because of my experience personally trying to get the company to series A.
Yeah.
It's bloody hard. And most companies do fail before you get to series A. If you're series B, series C, sure, you may put 10 grand down on a company and you may only get 30, 40, 50, but it's more of a secure investment as opposed to a company that you go, I'm going to put 10 grand on a seed company and pray gets to 400,000. It's sort of that, that really hard thing. But, I actually really like, the success I have, I like passing it on to other entrepreneurs.
That's great.
Because I think, as I always built Oddup with my co-founder to last longer than we do.
Mm-hmm.
And eventually we'll get to a stage where someone else will take over and make it even more successful. But we still want to keep on giving back to the people who gave us our chance, helped us get to where we are. There's a lot of angels have put some small money into us who helped us get to where we are. So we would like to pay it forward.
Yeah, that's great. That's a great the idea of building a company to last longer than yourself is a great thing to hear.
Yeah, I'm not egotistical like that. Maybe it's my age of over 40 and knowing that, eventually people get tired. When you're young, you feel like you can move the world. And having been part of DDs and, M&As and seeing how companies can fail at the last minute, you have to take your ego aside. Now, as the company's now head into our Series D stage, I realize that there's a lot of people better at the company at what I do.
Yeah.
And so I let them run with it and it works. And it's actually better for me to do less than to get involved and do more, as I used to do at seed stage, where I was here, there, everywhere, trying to figure out, and I was actually not as productive as I am now, where the people who are smarter, this is what happens,
Yeah.
That's what works for me. Yeah.
Absolutely.
I need to try and look like the pretty face. Not that I am, but I need to try. My co-founder typically is the pretty face, whereas I need to look like, the person that's there. I don't know. I'm just the person there. Yeah.
The person that's there. That is a high praise.
Yeah.
I can relate though.
Some smart quotes here and there. What's that, sorry?
Yeah, I can definitely relate to that. So going back to the angel investing thing, is there one common thing that you see business owners in that stage? Is it one common mistake that you see them make to help them sort of moving up to that Series A life?
So there's two things I say, particularly with angel investing. The first one is that people look at valuations rather than company. And so when they look at a valuation and they see it low, and they're looking at what their money can turn into, they're assuming the company's going to get there.
Mm-hmm.
And that's where the biggest problem is. So just because a company is a $8 million pre-money round and your $10,000 can, take a fair bit of equity, they're not seeing it from the perspective of it's 8 million because it's highly risky and it may not get there, so you may lose it all. That's the first problem with angel listing. Second, I see with angel listing is a lot of angels feel like they can add value. That is absolutely false. And I love my angels, don't get me wrong, but some of them are pains in the asses.
Yeah.
And that's because they're just not understanding how they're not in the business every day. And that's how ultimately that causes. And they know this, and so most of them don't. That at the time they wanted to be involved, they felt like they were part of the team. But in fact, there's only so many, introductions you can do. And so a lot of angels need to sort of take a step back and look at who the VCs who are leading the investments and seeing what they can do. Because, the bigger checks become bigger risks for the company. So they give a lot of effort. And so that's another thing that people forget. I think generally angel investing is really good because, I hope that as I grow, and I invest in companies, if they see me on the cap table, they'll say, hey, someone here, can you help do an introduction? And that's all they need from me.
Yep.
So if from my experience within angels, as an angel and also as receiving angel investment, is, give the money in goodwill and forget about it. And if you could help when the company asks for it, as opposed to harassing the crap out of them, all the time.
Well, you bring up a good point. I'm interested in, you have tinkerers. There's always tinkerers, people that think that they know what they're doing, as you mentioned. So how hard is it for an angel investor that needs money and they enter into agreement with someone that they know they probably shouldn't, or is there ever a conflict there where they go, I need this money, but I know I shouldn't take it from that guy?
Yeah. So I think one of the best lessons I learned from being in the 500 and the Kima networks as investors is the founders are the best source of truth. Mm-hmm. Because some founders have already received money and they will give you an honest opinion of an investor, if the investor is great to deal with or negative to deal with. And so as an angel, I always, now I'm very conscious of that. I don't want to be that, I won't use a profanity because it's too early in the morning. But I don't want to be that person that causes that problem. I want to be the person of going, he's good to help. He helps when he needs to.
Yes.
And I come back to my previous point. So look, there's a lot of lessons learned in this stage, but I would always again say to angels, when someone asks you for help with all your effort. If they don't get yourself in a perspective, because even your goodwill, it's a bit like, your parents sometimes, they intentionally mean well, but as you grow as a person, you feel like maybe they're in the way and you've got your own sort of life to lead in some form. Especially when you're a teenager, as a startup would be a teenager, and think of the company like a parent would. And this is one thing I do say to some angels is that, at the moment, a seed stage, you're just a baby and, they may need help, but at the same time, they're going and then they become adolescents and then become a teenager where they hate you for every reason. Then as over time, they start, and so, a company is a baby. And so as an angel, you need to look at it as you would as a father or mother, and so that's another way of seeing it. And that maybe not as complex, but, or an uncle, that's
right.
That's how it works. Yeah.
Was there anything that surprised you when you were raising money for Oddup in your personal experience?
Yes. So I don't make these problems now, but the lessons I learned, especially at Series A, is the amount of effort that's involved to do it, and two, focusing on a couple of key investors to, close out the round. There were so many times we were doing Series A, was the question I get from all these investors is, who else is investing? Who else is investing? And to me, and I thought, well, I needed that name. But then I realized that actually there's investors, and now I know this, those investors are of no value to me, where I thought I wanted value, but the only value they were who else. That's code for a startup to understand of we don't want to do the work. We'll just follow someone else who's going to do the work.
Yeah.
Because, we don't think you're worth all our time to help out with. And that's a hard thing to take when you realize it now. But at the time, you're focusing on every little one, trying to find that lead investor. So I always say to people, find a lead investor and just focus on them, and everything else just falls into place very, very fast.
Yeah, they're
very
the first domino to fall, and then everything else.
And it really falls into fast. I mean, Series A, we were working with Times of India, who were the BCCL group, because we wanted to go into India, and we knew they were number one. We spent a lot of time with them, and once we had them and the paperwork was sort of like in term sheets were done, the rest of it took literally a week.
Wow.
And it was because we had these conversations, and then the email, rather than was, why don't you invest? The email was like, well, we're closing the round in a week. These are the people who are leading it, let us know your interest. And then the emails came fast. And so once you've got that lead investor and people feel like, oh crap, someone else is managing that, and that's it.
Yeah.
Cut long story short, we work very well with Times, and they helped us build our branding, and so they spent a lot of time with us, whereas the ones who followed on barely spend any time with us at all. And so it comes back to the angel, works the same way.
It's amazing. It's like, who else is in this club that I want to get into? Yeah.
Yeah. But they may want to be at the club because they have FOMO, but they not necessarily, but they don't want to pay for the tickets. They want to walk in, they don't want to do all the due diligence and all that sort of stuff.
That's great. So, and your entrepreneurial path, was there a low point for you where, if you could think back, is there a low point where you said, this is the word, this is the down, this is as bad as it's going to be?
Typically pre-raises.
Yeah.
When I think, oh crap, it's not going to work out. Oh, and then lo and behold, just sleep, and then you wake up, something happens while you're gone to sleep.
Yeah.
And you'd be surprised what happens. And it's quite funny. I was saying this to my co-founder, that a lot of our funding deals happened around this time of the year, in around Christmas. And just when you think, oh crap, nothing's going to happen, it happens.
Yeah.
That's been low point. I think a low point was when initially when people started over time left the company, particularly analysts, because as I decided to go towards that data model, a lot of people were disenfranchised, going, well, I came to be an analyst. I'm not necessarily came to be a data import person. And so seeing people get a little bit emotional was really hard. And that's where the help of having people who are HR focused, and I always want to make everyone happy. I always want to make sure that the whole team is working well. Having that move over to a level where you're not so emotionally invested in everything. You just have to realize, okay, it's another day, it's another problem.
Yep.
That's it. But for an entrepreneur, every week there's a bloody problem in some just some form. And so yeah, it's just the nature of the beast. So but there's been a lot of times, particularly early on, where I thought, oh, why the hell am I doing this? This is not making any money. We can't pay the bills. And as times have gone better, it's become less of a stress.
Yeah, well, I totally agree that the roller coaster is fascinating. I always say the highs are high and the lows are low. As it relates to this, have you seen any strategies? I mean, a startup business can just be draining physically and emotionally. Have you seen any strategies that either you or one of your companies you invested in used to help the owner kind of get through that? Anything in particular that helps business owners with that strenuous issue?
It's hiring good people,
and
having great mentors, and having those two things. And your mentors don't need to be some senior person who's 70 years old. You can actually have mentors who are founders who are, let's say you're at seed stage, who are Series A stage.
Yeah.
And I found that was the best strategy, particularly from the founder side, because they were giving me information of what was going to come next, rather than me trying to figure out how this works. They just did it. It was fresh in their mind. They told you what to happen.
Shortcut it a little bit.
Yeah. And time is valuable.
Very true.
So that is the other thing. So stop wasting time on things that aren't working. Move on to something that is, or try something different, pivot, or so forth. Because it's like kicking a dead dog. If the dog is dead, he's not going to wake up and go, "Hey, how you going?"
I'm back.
He's dead. So you just keep on pressing on, Yeah. And that is one of those things that you learn those lessons over time. And there's been many of those lessons that you learn.
That's great. Well, this has been fantastic. I just have one question. Now let's bring it all the way back around. Have you ever gotten Kylie Minogue to invest in one of your businesses?
No. I would have just liked a date with her, even just to catch up with her, just hang out, just see what we could do together. But no, she and I, I clearly, have good rapport with her. The question is, does she have it with me, or is it only in my head? So,
I love it. James, this is great. I really appreciated your time today. It was fantastic. I really enjoyed our conversation.
My pleasure. It was wonderful for me as well.
If you'd like to learn more about James and Oddup, go to oddup.com. Like he said, 5 letters, ODDUP.com. If you want to connect with me on the Untapped app, my username is brcarney7, where you can find out how I rate all these beers. To learn more about how our firm helps business owners with their financial planning, visit riversedgeadvisors.com. And to hear past episodes of the podcast, go to happy-half-hour.com. Now, since you're driving me home tonight, I'm going to give a rating to this beer. New Belgium, well done by you. I'm going to give it a 4 out of 5. Definitely would drink this again.
So you've given it a green dot. Well done.
That's right. A green dot. That's right. I gave this a
it's a buy.
It's a very strong buy recommendation.
You heard it first.
James, thanks so much.
My pleasure. Thank you.
Cheers.
Thank you for listening to Happy Half Hour with an Entrepreneur, sponsored by Rivers Edge Advisors. For more information on how Rivers Edge Advisors can help you, visit their website at riversedgeadvisors.com. If you'd like to connect with Brian Carney for business advice or just to share beer, follow him on Instagram at riversedgeadvisors_LLC.